Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about should you buy FAANG stocks. Now, for those of you that don't know what FAANG is, this is Facebook, Amazon, Apple, Netflix, and Google. These are pretty much the top 5 most powerful tech companies in the United States, and if not in the entire world. So we're going to be talking about should you buy these. We're going to be breaking down every single one so you guys can understand should you buy them or not, or stay away from them. So I hope you guys enjoy it, and overall I hope you guys get something of value out of this video, because that's the main idea with the video, with the channel. And if you do, smash that like button, because at the end of the day that really helps me out. And if you guys want to be the absolute best people, subscribe to the channel, because that, guys, that helps me out the most. So guys, I hope you guys enjoy it. Roll the intro. Let's go.
Alrighty guys, so the very first one we're actually going to look at here, we're just going to start through it with Facebook. Now, for those of you that don't know what Facebook is, you must be living under a rock. Now, Facebook is an absolute powerhouse. Literally, they have around $64 billion sitting in cash. So if Facebook ever slows down, they have so much cash to get through a hard time or a bad thing. You know, any company that comes out and either wants to compete with Facebook, Facebook will either A, buy them out, or just overpower them. They're a very strong and powerful company. You guys can see it does have some lows down here at $143. And you guys can see this right in here. This was the overall March crash last year. Fell 35% and is up over 180% and growing, right? You guys can see that we've had a little bit of some sell-off in this right on a support line. So for me, this is definitely a short-term yes and a long-term yes. Now, Facebook owns so much. They own Instagram. They bought that for like $100 million. Now it's worth over $1 billion. I think this is just a phenomenal company and growing. It's an absolute no-brainer. Okay, guys, this is just one. It's going to be a little more volatile just because Facebook is always in the news, but it's definitely one to take a stab at for sure. Now, the next one here we're going to talk about is the one and only APPL. This is Apple. Now, Apple is that powerhouse company. You guys can see it sold off very similar to Facebook. Now, one thing when you guys look at this, you guys can see it does have some resistance near, this 139 to about this 145 area. This is where we get a lot of sell-off in it, right? It came in contact here once, came in contact twice, 3 times, 4 times. Now what happened is it's selling back off. I think this old resistance is going to act as new support for it. Not to mention, sell-off always brings opportunity, and Apple is just a solid company. It's not going anywhere anytime soon. They have hundreds of billions of dollars sitting in cash, ready to use if they either want to invest it in the company or if the company ever slows down. So Apple for me is an absolute yes. This is a company that's growing. You get paid dividends. It's just a solid account. Every investment account should own just a little bit of Apple. You know, it's an American icon. Now moving on to stock number 3 is the one and only AMZN. Amazon. Now, Amazon is one that is a little more volatile, right? If you just look at this chart, you guys can tell that lately it's just up and down, where a lot of them are more, steady increases. But when Amazon takes off, it explodes in such a short amount of time. So looking at this, it does have some resistance near around 3,500, a lot of support near 2,800 to about 3,000, right in this zone. A ton of buying pressure always steps in. Not to mention, if we look at it, a little more clear, you guys can see there's always a lot of buying pressure near these yellow lines, right? This represents a 200 moving average line. This is an overall trend indicator and a support and resistance line. So when it comes in contact with it, you guys can see this long wick right here. This is an extreme buying pressure, so it gets bought up and really has a hard time breaking below it. Gets bought up, boom, sells off back down to it, bought up, sells back down to it, gets bought up. So now that represents probably one of the strongest supports on the chart, is that 200 moving average line. It does have some of that resistance at 3,500, like I said. So for me right now, Amazon is in kind of one of these middle grounds, right? It's not overvalued, nor undervalued. It's just kind of right in the middle. So for companies like this that it's hard to determine if they're over or undervalued, a good strategy for it would be dollar cost averaging. What you do is you pretty much just be consistent with investments. So if Amazon stock goes up, you make money because you already bought some. But if it sells off, all you do is you average down your position. Amazon's not going anywhere. They make hundreds of billions of dollars every single year, and they're growing very, very fast. They have a pretty solid margin rate and a lot of cash on hand, which is very, very, very good, with very little to no long-term debt for the company. Now, moving on to the N in FAANG is Netflix. Ticker symbol, or I don't even know the ticker. I always forget it. NFLX. There we go. This is one that is going to be probably the more volatile one on the chart here. You guys can see it has a beautiful upward trend, but when looking at it, you guys can see it goes up and down at very, very rapid rates, right? Look at all these spikes and lows and everything like that. So we're actually going to change it from the 5-year to the 1-year chart. And you guys can see the 1-year chart isn't much, right? I think the year to date, it's about 4 or 5%, depending on the day. But you guys can see, we'll just draw out some support and resistance. Resistance here around, probably around 600. A lot of support near 475. And you guys can see if we just actually draw out the overall increase, if we bought it 1 year ago, we would be up around 20%, which is actually pretty good. But depending on when you bought it, that's when you would be up. So this is the year right here. Actually, I didn't see that. So that is 8%. So that's a little more realistic depending on the day. So you guys can see it's more volatile where we have these extreme buying pressure, and then it will sell off just like it's done down in here, back down here. Okay, so the strongest support on this is going to be this 200 moving average line. Strongest resistance is going to be a price resistance near 600 to 615 now that we've had some sell off. So this one is going to be the more volatile one. For me, I don't own really a whole lot of Netflix just because of the volatility with it. But overall, it's still a growth stock, so it's going to be going up and down, but it's going to have some years where it struggles and some years that it absolutely kills it. One thing that is going to be hurting Netflix is the competition in the streaming sector. Now we have Disney Plus coming out. We already had that come out. We had Hulu, HBO, all these companies that are now starting their own streaming service. But Netflix, I think it's 1 out of 6 people in the United States have it. So it's just a solid company. It's not going anywhere. It does have quite a bit of long-term debt, which definitely dilutes it. But, what can you do with that one, right? All right, guys. So the last one that we're going to look at in FAANG is Google. Google is a absolute powerhouse. Google actually has 3 stock tickers. You guys can see it's also known as Alphabet. So it's GOOG, and that's the C class. The A class is GOOGL, and there's a B class, but the B class is for employees and people on the board and stuff like that. So we'll just pull up the A class. There's no difference in them. Look at this. Beautiful upward trend. No major sell-offs. No major ups and downs, just steady growth. This is just one you always need in your account, right? We've seen a little bit of sell-off of about 2 to 3%. And so sell-off just brings opportunity, especially for a company like this that doesn't move a whole lot, but the absolute growth is phenomenal. So I would recommend everybody that's watching this video, go out, buy a little bit of Google. You won't regret it. Don't even look at it for 5-10 years, and I guarantee you'll absolutely at least outperform the market for sure. But upward trend, and if we actually go ahead and we go to the 3-year chart, you guys can see just how strong lately this stock has been. It sold off a little bit down in that crash here, but people realized, well, people are going to be online more, so it absolutely took off and hasn't looked back ever since, guys. This is an absolute no-brainer, probably my #1 choice out of the FAANG stocks. So I hope you guys enjoyed the episode.
So guys, I hope you guys enjoyed the episode, and overall, I hope you guys got something out of this video. Even if you guys just learned one thing, it helps me out, and you guys can implement that into your investment, account. So I hope you guys enjoy it, and overall, I hope you guys got something of value, and we will see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care, everyone.